Here we go. Neato. Alrighty. Let's get this stuff started. Off-grid solar, Carlita's way. What are your thoughts on PBR? 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 What is PBR? I know what PBD is. Bank stock with high dividend. JMag, how are you doing? Only 3 more trading days this week. Yep, Bob, that's correct. Queen and King TV. Wow, now that's interesting. I'm kind of interested in what that has to do with it. Yankee Dude. Okay, cool. Barry, what did you buy today? I don't think I bought anything today. No, I didn't. I had all the exact same positions I brought over from last week. Damn it, and I didn't. Lowe's jumped up. I wasn't expecting that one. I thought Lowe's was going to go down. Sorry, I am late. Sam Saki. Cheryl Lee. How are you doing, Miss Cheryl Lee? Glad to have you here. You know, Cheryl Lee, just in case you didn't know this, women make better traders than men do. They're more methodical, more stick to the rules, so to speak. Hey, bud, it's me. Send tacos. Hey, dude, welcome back again. I remember you here last couple of times ago because I remember that name. Beebly Weekly. Yay, that's good news. Sorry, I am late too. Alvin Pro King Services. Cool. Cameron Carey. All right, so let's just get started and go over what we're looking at today. What did we do today? Well, AEO, Bitto, Kohl's, Lowe's, Macy's, MPW, and Win. All right, let's take out my trusty old book and see where we are today. Now, you guys suggest stocks for me to take a look at, so we're going to pop up our list from yesterday. Now, let me know if the microphone works better, because I got a new microphone on YouTube. And for those you do not know, this screen right here is live on YouTube. E.T. Uh-oh. I'm drawing a blank. E.T. NASDAQ 100. Sorry, David. David Jane Anthony. Okay, yeah, I don't do the NASDAQ 100. I just do dividend stocks only. I look for a safe, predictable, consistent 1% per week using dividend stocks only. Okay? ET, isn't that energy transfer? DOCU, never heard of it. DOCU. Doc, how's it going? Are you on YouTube too? Yep. Now, I am on YouTube. I get 2 channels on YouTube. So there's 2 lives on YouTube at the moment. YouTube, LinkedIn. Nope, not on LinkedIn yet. YouTube, TikTok, Facebook, and Instagram at this moment in time. We're going to be looking to get into LinkedIn, Rumble, Truth Social, and Twitter. What app do you use to buy options? All right, David, I use Thinkorswim, which is right here behind you. Okay, this screen is live on YouTube. That way you can be able to see the small numbers, because you're not going to see these numbers on your phone or your iPad. No, you're not going to see those. So it is streaming live on YouTube. That way you can look on your big screen TV or on your computer, see the numbers easier. Now, David, I do use Robinhood and I do use Thinkorswim. I have 6 different accounts. I share 2 of them with you guys. Sam, how do you search for you on YouTube? Hi, how do I find you on YouTube? Okay, so here's the thing. Top left corner. You're here on TikTok right now. Top left corner, you see a little picture of me over there. Yeah, give me a little slap in the face right there. That's going to pull up my bio, and it's also going to pull up my website. Here's my website right here. Like I said, I was just getting a new website, so this is what it is. It's not quite ready to go because I don't have any of my old positions. Okay, now yesterday, if you guys were here yesterday, you could see all the trades I made this year. They're there. They're just having a new website. Having a new website made, so we're not going to be referring to my website tonight because it is still glitchy. Charles Schwab is trying to mess up Thinkorswim. Yes, they are. Now, I've had Thinkorswim for the past 15 years. Okay, and they've taken away a few of the nice things I liked about it. The research. I was able to go in and see real-time data on the stories, not the stories, the details on the company. Okay, that's not available anymore. It used to be education, nope, help, nope, tools, ThinkScript, charts, market watch, financing rates, visualize, yeah, yep, earnings, right there. Fundamentals, okay? Look, the fundamentals are all wrong. Where are the earnings per share? Where is the book value? Where is the dividend increase amounts? Julie, how you doing? How about Shiba Inu? Yeah, sorry, dude. Brian, that's a no. I do not do any cryptocurrency at all. This strategy for trading options. Well, Jared, I use covered calls. That's all I do. Covered calls on dividend stocks specifically to capture a 1% per week return. That's basically what I'm here for. Weekly returns using pre-qualified dividend stocks. And those are companies that have increased their dividends consistently. Okay. Why do I want companies that consistently increase their dividends? Well, specifically 20 years or more of increased dividends. What is a covered call? Oh my goodness. All right, Jared, a covered call is basically where you own the stock. You got to buy the stock first, and then you sell somebody the right to buy it from you using a call option. Okay, now I like the weekly call options. They have two different kinds of options. There's a put option and there is a call option. I don't do puts. You knew that? Well, great. A covered call is where I buy the stock. Right up here. Here's the stock prices. Okay, we're looking at lows, 226, 226, 227, 28. That's what I can buy it for. Okay, now if I'm going to buy it at this price right here, 227, I'm going to want to sell it for 227. It's only giving me $1.60, which is not 1%. I didn't realize that's what it was called. Oh, well, alrighty then. Yes, when you buy a stock, you sell a call option against it. So if I buy it for $100, sell it for $100, and I collect a 1% premium, that's what I'm looking for. Okay, Aaron, encourage more viewers to share. Yep, like, share, subscribe, all that kind of stuff. Ooh, look at that. Andrew wants to take a look at Eli Lilly. Okay, now, just to let you know, Andrew, I probably won't get to it tonight. I got this long list. Okay, this long list to go through tonight. All right, and yours is just right here. Okay, so I won't get there tonight. Smart man. Well, thank you, Jared. I'm going to take that as a compliment. Let's get rolling. All right, so VOD. Really, Julie? VOD? I believe that's Vodafone, isn't it? VOD? I don't know. I wrote it down, Julie. We're going to take a look at it. Might not get to it tonight, but I'm just getting started, just getting warmed up. It's about 9:15. Let's get rolling. Yep, Vodafone. Well, all righty, Julie. I used to trade Vodafone. I don't think I trade it anymore, though. S-Bucks. Ready to go. All right, S-Bucks is on our list. Starbucks. Where is Starbucks on the list? Yep, Starbucks is third on the list. First on the list tonight is COP, ConocoPhillips. Ooh, COP. Here we go, COP. Okay, first thing I always want to look at with any dividend stock is what am I going to be able to buy it for first thing in the morning? Okay, up here, the trade grid. What am I looking at? The last trade, the bid, the ask, the volume, how many shares traded today, the open, the high, the low, the close, all that kind of nice, neat stuff. Hey, Mikey G's here. How's it going there, Mikey G? All right, so somebody let me know on YouTube whether the microphone, see the microphone I just got, if it's working well. All right, because I did a couple of tests earlier today, and it seems good on the pre-recordings, but I don't know how it's actually coming over live. So that being said, let's get rolling. I was thinking of also getting another So I have two microphones. I'll put one on the one on the phone so you guys can hear better. I'll check it out. Thanks, Wade. All right, so ConocoPhillips. First thing I want to see, 110.66, the closest strike price. Okay, the closest strike price is going to be the 111, and that's going for 44 cents. Even the 110 is going for 80 cents. Yeah, neither one of them's giving out what. What app are you using to get the boards? Well, user 61387951599, whatever. This is Thinkorswim. It's a trading platform. Okay, it's just Thinkorswim. Okay, offered by Charles Schwab. Yeah, okay. But I like Thinkorswim. I have it set up a certain manner in which I like it. They have so much data available. It just drives me nuts. All right, thanks, Mikey G. What app are you using? Okay, Thinkorswim is good if you can log in. Yeah, well, here's the thing. Thinkorswim just got bought out. Well, Thinkorswim got bought out by TD Ameritrade. TD Ameritrade got bought out by Charles Schwab. Charles Schwab recently took all the TD Ameritrade accounts, transferred them over to Charles Schwab. During the transfer, major conflicts, major issues, blah, blah, blah. Also, Thinkorswim does weekly updates. So Saturdays and Sundays, they update it, makes things offer. Do you offer a class? Yes, Ryan, I do. I'm from South Africa. It's not available in South Africa. All right, David, actually, you could get a VPN, a virtual private network. Just go online, search VPN. Okay, and that will allow you to sign into anywhere. Okay, with a VPN, you can sign into Chicago, and people will think you're from Chicago because that's what the ISP will say. ISP is the Internet Service Provider. You can, with a VPN, you can sign in anywhere. You can sign in even in Moscow. People think you're in Moscow. Okay, so yeah, David, you can do it through a VPN. The nice thing about you being from South Africa, you can open an account as a, what do you call it? Hold on. Resident alien. Okay, resident alien, you don't pay any taxes whatsoever. Anyway, let's keep on rolling. Okay, so that being said, hey, Daniel's here. Hey, nice going there, Daniel. All right, so ConocoPhillips doesn't make it, doesn't give me 1%. Okay, fine, I'll take a look at another time. TIA, or is it Tay, or is it Ty? I don't know, TAI, is it Ty? What are your thoughts on NOC and LMT? Lockheed Martin, I like. NOC, I've never heard of them. With the military budget being increased, military budget's always being increased. The NOC, like I said, never heard of it. I wrote it down. We'll take a look at it a little bit later, and I'll give you my opinion at this moment in time. Lockheed Martin, yeah, I like them. NOC, never heard of them, so it's probably a no. Okay, Durden, what do I think about PLD? Well, PLD, I never heard of them. Okay. Gummy Bear, MO, which is Altria. Now, Altria is on the list from yesterday. Okay, Altria is on the list from yesterday. We'll get to it eventually. So, let's get rolling. Prolog Industry REIT. PIR. I never heard of them. Prolog Industrial REIT. Yeah, sorry, dude. Never heard of them. ELD. Sorry. We will take a look at it, and I'll give you my opinion. HON. Never heard of them either. HON. Is that Honeywell? HON. I don't know. We'll get to it. Okay, so no to COP. Next on the list is going to be Comcast. CMCSA. Comcast. Okay, incorporated in 1964, has 64 million users on a monthly basis. Can you imagine that? 64 million people writing you a check every single month. Do you think if anything is possible, it's still possible for anything to be impossible? Well, that's interesting. Do you think if anything is possible? Yep. It's still possible to do anything to be impossible. Well, all right. Pan W. Never heard of them. PANW. It's on the list. We'll take a look at it. What's your favorite stock? M or I am leaving. Okay, well, my favorite stock is Macy's at the moment. Macy's has been very good to me this year. Macy's, Walgreens, Kohl's, Nordstrom's, all of those. Some strange reason were rarely good this year. Okay, first on the list, Comcast. Well, let's take a look at Comcast. Look at this, 37.40. The 37.50 is going for 26 cents. Not quite there. Bummer. And I like Comcast. Alcoa. Hey, Scott. AA. Okay, we'll take a look at Alcoa. Okay, AEO. AEO. Because Comcast was a no. Kroger was looking good this morning. Yep, we did look at Kroger this morning. And some people bought Kroger. Is Kroger on my list? All right, we'll take a look at Kroger again. Probably won't get to it tonight because I got a lot to take a look at. DE, John Deere. Ooh, someone just gave me a hat. That was nice. All right, I didn't catch that other one. Yield of 2.5, yield growth 5%, earnings per share 5%, big three index exposure. Okay, now, Durden, LNC. James, where are you from? I'm from the Boston area. LNC. We're probably not going to get to that one tonight, LNC. But Turden asked me a question. Bob, since there's only 3 more trading days, would you accept a 0.6% tomorrow instead of 1? Sure, why not? Hi from Indonesia. Hi, I'm a portfolio manager at a big regional bank. Ah, okay, Mr. Turden. Hold on a second. You asked me a question about something. I'm just going back to see if I can find it. Oh, there you go. Turden. Prologue Industries REIT. You want my opinion on Prologue Industries REIT. And you're an investment banker. Whoops. Come on. Get out of there. Yes. All right. I need that ticker symbol again. PLD. PLD. Oh, Prologic Inc. REIT. Yeah, that's a no. That was pretty quick, wasn't it, Durden? Now, let me explain to you, Durden, why it's a no. So let's go to some of these. Yeah, PLD. Okay. Now, Durden, let me explain to you why, for me personally, it may be acceptable for you and for your clients. Great, fine, dandy. It's a no for me. Now, I'm gonna give you a bunch of different reasons why it's a no for me. PLD. PLD. I'm putting PLD into Yahoo Finance into the we call it historical performance. Okay, so I want to see what kind of dividends this company's paid out, how often, blah blah blah, all that kind of nice, neat, fun stuff. Historical pricing, dividends. I want to see the maximum amount of dividends they've paid. Okay, they go all the way back to 97. Okay, so 97, 2007, 2017. Okay, that's more than 25 years. Well, alrighty then. So PLD has paid dividends for the past over 25 years. So let's take a look at the numbers, see what they look like. All right. We started out at 13, 34, 35, 37, 40, 41, 42, 43, 44, 46, 50, 52. Whoa, hold on. Hold the phone. 2008, they were 52 cents a share. 2009, they were 28. Okay, they've cut the dividends almost in half. 28. Oh, look at this, 28. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 quarters? 20 quarters. That's 4 years. They didn't increase the. Okay. So back here, 97, 98, 99, 2000, 2001, 2002, 2003, 2004, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. Okay, so we went from 2008, 52 cents a share, to 2009, 28 cents a share. And then 2009 to 2013, it's 4 years. Yeah, the screen is bright, but the screen is also live on YouTube for you to see the numbers because you can't see these numbers on the screen. I'm just reading them down. Okay, so they don't consistently increase dividends. That's one thing I don't like about them. That's one. Next thing, what else is it I don't like about this company? All right, here you go. Major thing I don't like about this company. Look at this. 3.42% yield. Okay, 3.42% yield. All right, so I'm here showing you guys how to get a safe, predictable, consistent 1% per week. And Mr. Durden, you're asking me to take a look at a company that, number one, doesn't consistently increase their dividends every single year. I mean, don't get me wrong, they've paid dividends for over 20 years. Great, fine. But they don't increase them consistently. And they cut their dividends once. They cut it right in half. That's one. Second reason why I don't like it, monthly options. Why don't I like monthly options? Well, the reason why I don't like monthly options is because there's only 12 months in a year, which means I can only do it 12 times. So let's just take a quick gander at the number. 111.43. The closest one's going to be the 110. And I'm getting $1.40 for it. All right, so $1.40 to 320. So let's say hypothetically I get 2%. I get it for $2. Because right now at 111, I'm selling the 110s. I'm losing $1.43. That's $1.40 right there. So what am I getting? Absolutely nothing. Okay, based on the numbers I'm looking at right now, I'm getting absolutely nothing. If I buy it at 111.43, I sell the 110s. It's either the 110 or the 115. 115 is going for 20 cents. Yeah, that ain't gonna work for me. Okay, the 110s are going for $1.40. I'm losing $1.43 buying it at 111.43, selling the 110s. Okay, so what am I actually walking away with? I'm walking away with almost nothing. Okay, depending if I can get a better fill than what's actual the numbers here. Okay, that's not the worst part. Here comes the worst part. All right, this one's only 4 days away. Okay, so great. I'm getting $1.40 for 4 days. And if I don't hit my target, what do I go to next? 32 days. That's 4 weeks. I've got to carry it for 4 weeks. All right, great. What am I getting in 4 weeks? Well, 4. So if I buy it at 111.43 and I sell the 110s, I get $4.50 for it. Let's bring up my calculator, do some interesting calculations. I'm going to clear that out of the way. 111.43 is the purchase price, and I'm going to add to it the $4.50 option. Okay, the 110 option, but it's a $4.50 premium. All right, so I'm going to add the $4.50 to it. Plus 0.5 equals that. Okay, great. Now I'm going to subtract the purchase price because that's what I'm buying it for. The strike price, 110. Subtract 110. So my profit is going to be $5.93. Is that correct? That's not going to be correct. No. Okay, clear that. Sorry, that's not right. Okay, the 110 plus the 450. Okay, plus 450. That comes a grand total of 114.50. That's going to be my sale price. So if I buy it for 111.43, I sell, the 110s, which expires in 8 weeks. Is that right? Wait a minute, no. 7 divided by 32 is for 5 weeks. All right, so I got to hold it for 5 weeks. All right, now I'm going to subtract the purchase price, 111.43, and my profit is going to be a grand total of $3.07. So I'm holding it for 32 days. 32 days divided by 7 is 5 weeks. So I'm going to divide the $3.07 by 5 because I got to hold it for 5 weeks. I'm getting a grand total of 0.6% per week. That only half the issue. Here's the other half of the issue. Look where we are. Okay, 2 months ago, we're down at 102. She jumps up to 113, drops back down to 103, shoots up to make a 30-day high at 116. Now we're at 111, 3 days to the downside. More than likely, she's going to keep on coming down, but how far down? So I'm trying to figure out where she's going to be in 5 weeks. I have a hard enough time trying to figure out where she's going to be in 5 days. 5 days, more or less, she's going to be on the 108 area because you get your 30-day bottom, you get your 30-day top, you get your profit taken. She's going to come down here. It's probably going to be on 107, 108 next week if it was a weekly, but it's not. It's a monthly. So I got to figure out where the heck is this thing going to go in the next 5 weeks? 5 weeks. That's a month, and that's no. I don't like monthlies. Number one, it's a monthly. Number two, it's paying 0.6% per week. Okay, so if I'm buying at this price, selling here, which is the closest strike price, collecting $4.50 a share, nice, fine, dandy, $4.50 shares, nice. But I got to hold it for 5 weeks. Okay, and if I'm wrong, I've got to hold it for another 4 weeks. So whether or not I can figure out where it's going to be in 5 weeks, which is very challenging in and of itself, is your TikTok live down? No, TikTok is working at the moment. Okay, so Durden or whatever your name was, no, I don't like monthly. So PLD is a big fat no. Okay, all right, I'm going to erase that one. That one's out of here. Let's go back to AEO. AEO. Okay, was an update today. Cool. Up over 125%. All right, I'm not seeing what you're looking at. PLD is a monthly. Yep. PLD. Yep. Got it. Cause, I don't know what you're talking about. Okay, you're a portfolio manager for a big regional bank. That's what we look for in dividend stocks. Okay, Turden, that's awesome. That's what you look for in dividend stocks because you're investing money for other people. I'm investing my own money. Now, you may think you have your best interest of your clients in mind, but you don't have more interest in my money than I do. Okay, if I can safely, and I've done this for over 15 years, I would show you. Wait a minute. Yeah, I can show you. I'll show you in a minute. Hold on a second. I want weekly cash flow. The only way I'm going to get weekly cash flow is with weekly options. I don't look at monthly optionable stocks. And with that thing you showed me, TLD or whatever it was, PLD, yeah, there's no way for me to judge where it's going to be in the next 5 weeks because that's when the option expires. Okay, now, if I like AOE, which I do have some of it, the last 30 days, where are we? The 17th, 15th, 17th, right here. Okay, so let's look at the last 30 days. 30 days ago, we were at 23.50. Drops down a little bit, jumps back up, gets our 30-day high. Well, what happens after a 30-day high? Well, we all know after a 30-day high, most likely there's going to be profit taking. Well, there was. And look, all the way down to today. Today is a new 30-day bottom. Okay, so what happens after a 30-day bottom? Well, you and I, the buyers and sellers, we think to ourselves, wait a minute. This company's at a 30-day bottom. I have nothing to drink. Holy cow. Ooh, quench my thirst. So the 30-day bottom's here. Okay, but it might come lower tomorrow or the next day. Well, I'm not going to jump in tomorrow because I want to see 2 days to the upside before I jump in. Okay, so here's a 30-day bottom. You can't get any lower than the bottom. Once you're at the bottom, then you got to decide, do I buy it now, take that chance, the 50-50 shot? You know, tomorrow could be a new bottom or it might move up because eventually, me and you, we're the buyers and sellers, we decide whether or not that is cheap enough for us to jump in and buy. Okay, so at this moment in time, he should give you some commission or bonus if he does well. Banker 2319. Hey, all right. So, okay, is that KQ5 or is that KO5? I don't know. KO5 120% on Dell. Cool. We'll put Dell down. Now, we did take a look at Dell last night. Actually, Dell is on the list. We put it down last night. So if you're only looking at stocks with upcoming dividends and selling covered calls contracts too. Yep, Will, that's about right. Okay, why wouldn't I? Think about it. Think about it logically for a second. Okay, so there's we checked yesterday, 9,542 different companies I could invest in at any particular time. Now, out of those 9,500 change, there's two different kinds of companies, and that's it. Ones that pay dividends, they take their profits. If a company is profitable, they're going to take their profits and they're going to hand it out to the investors. Those are dividend companies. The other half, okay, the other 4,000 or 5,000, they don't. They take all the profits, they put them back into the companies for capital appreciation. So the stock value goes up higher, faster. That's not what I'm looking for. If you're looking for that, you're in the wrong place. I'm going to tell you right now. Okay, I'm retired. I have to live off of my interest of my little nest egg. So I got my little nest egg. I invested in dividend stocks and I sell covered calls against them based on the calendar. Why the calendar? Well, because each one of these little green dots represents an EX date. What is the EX date? Well, the EX date is the last day the stock trades. There we go. How's that better? That's a little better? Okay. It's the last day the stock trades before the dividend is paid. So the stock has a tendency to go up in value 10 days or 2 weeks prior to the EX date. So if I'm looking at American Express, okay, has its dividend on the 5th of July, okay, 2 weeks before that would have been today, the 17th. Great, we looked at it this morning. Everything looked fine, except the chart wasn't that great. Okay, Jay, Microsoft is on the list, so we will be looking at Microsoft a little bit, all right? So what are we on now? AEO. Let's go back to AEO so you can see where we are. So AEO at this moment in time, 21.24. The closest strike price is going to be the 21. Well, let's go for 21 cents. That's 1%. However, if I buy at 21.24, I'm losing 24 cents right off the top. Yeah, so that number doesn't work. Okay. Let's get out of that. Let's look at next week's. So this week only has 4 days. Next week, check it out. Next week's 21 is going for 41 cents. The 22 is going for, yeah, that ain't worth it. 21.50. 21.50, nice. That one works. Okay. So next week's 21.50 works. Great. I like 1% per week. Now we're in Monday, so we're actually looking at Tuesday. We got 3 days left? Tuesday, Thursday, Friday. Okay. And we're missing on a Wednesday, so the numbers aren't going to be as good because we're missing a day. Okay, so I might not get a full 1% this week, but I already made my trades this week. One count I made over 1%. The other count I didn't make 1%. So does it work for me all the time? No, it doesn't. But I average over 1% every week. Okay, on average, because right now we're in week number 25 of the year. Okay, this account here is up over 60% for the year. Account, what's the other account? This account here, oops, this account here, which is my second account, I only share 2 accounts with you guys, is up over 29% so far. So it's well over 1% per week. Okay, so AEO, again, as I'm saying, last 30 days, she dropped a little bit, pulled back, profit taking. Here we are, new 30-day bottom. I already own AEO. Okay, I got my 1% on that. Hi, what companies did you trade today? Simone, how are you today, Miss Simone? Well, this morning we did AEO, Bitto, Kohl's, Lowe's, Macy's, MPW, and Wynn. That's what was on the list for today. All right, so Starbucks. Let's take a look at Starbucks. Why is Starbucks twice on the list? Okay, just to let you know, I do own some Starbucks. Okay, so let's take a look. SBUX. Why are we looking at Starbucks? Well, we like Starbucks. Let me just kick this fan over a little bit so I can enjoy some of that air too. All right, so Starbucks. Check it out. 81 81.38. So the closest one's going to be the 81, a buck 01. Great. The 82 is at 53, 38, just a smidge under 1%. It's like zero point 0.8. Okay, 0.8. I can do with it 0.8 for the week. All right. So Starbucks a year ago, 101.91. Topped out in the middle of November at 107.35. Bottomed out a couple of weeks ago at 71. Now, funny thing about Starbucks, check it out. I jumped into Starbucks at 88, right here. And then she dropped. Well, what did I do? Well, I do what most anyone does. Once you find the bottom, which was a week later, okay, she drops and then she goes 5 days down, then 2 days up, and that's where I jumped in right there. I think it was 73, 74. I think I jumped in at 73. So I got half at 88 and I got half at 73. So I'm somewhere in the middle, 85, somewhere at 84, 85. Calvin Hill, how are you doing again, Mr. Calvin Hill? So that being said, Starbucks had a nice day today. Look at it. We're saying 81.33 at the moment. Okay, great. So what does that mean? Well, it doesn't mean a whole heck of a lot of anything other than, okay, as you can see, this gap here is slowly filling. Gaps have a tendency to fill. Well, here's our bottom at 72. She's going up and right up there. So we got from 83 to 88. So we have $5 more to go to fill that gap. Now I don't mind because I get Starbucks. I get 2 positions in Starbucks, which I have no problem with. I think I have the 80s and the 90s, I think. But anyway, is what it is. So that's Starbucks. And I like Starbucks. What does Starbucks usually do this time of year? For that, we use the seasonality chart. And that basically, ooh, take a look at that. You can't mistake that for anything. All right, so here's where we are now. All right, here's where we are now. Okay, she's going to dip a little bit into next week. And then look for the next 2 or 3 weeks to the upside. Now that's historical performance. That doesn't guarantee that it's what it's going to do. All that means is that's what it has done over the last 10 years. Now, the seasonality chart I look at has 10 years worth of data because my humble opinion, 20 years is too far in the past. 5 years is not enough. So I like 10 years. It gives me a good number to go by. Alrighty, so that is Starbucks. Oh, check this one out. Next on the list, Cisco. Remember, there's 2 Ciscos, CSCO and SYY. We're looking at CSCO. CSCO. Cisco. Okay, so Cisco, check it out. 45.70. The closest one is going to be 45.70. Okay, 45. 45.50 is going for 45 cents. The 46 is going for 20. Neither one of them is giving me 1%, but they're not going to give me 1% because we're looking at Tuesday's numbers. DNP has been nosediving. Why do you think? Patricia Cooper Huff, how are you doing today? DNP. Okay, Patricia, I'd love to help you out, but I write the stocks down as they come in. So we're over here on this list here. So I have all of these. We're not going to get to all these tonight. And then we have all of those. And then yours is right there. Okay. I will get to it, but more than likely it's going to probably end up being sometime tomorrow night. So I'm on every night, 9 p.m. to 11:30. Okay. So you got to ask as many questions as you like, learn as much as you possibly can. And yep, good. Works for me, Patricia. Awesome. Okay. So let's finish taking a look at Cisco. Okay, Cisco, 45.70. The 45.50 is going for 45 cents. We're going to lose 20 cents off the top, so I'm bringing in 25 cents off of a $45 stock. Yeah, that's not 1%. Sorry. But take a look at the chart. Now, we've been watching this. Now, we've been looking for the 2 days to the upside. You ready? Now, we have 2 days to the upside. However, they're both lower. Okay, so today is the low of the 30-day period, which is a little bit lower than yesterday, which is a little bit lower than Thursday. Okay, so Thursday's here, Friday's here, today's here, Yeah, even though they were up days, they still made new bottoms. Okay, well, that doesn't count then. Okay, they have lower lows. They don't have higher highs. So we want it to go into the upside. It's still going down. It's plain to see that it's going down. Eventually, when it finds its bottom, turns around, goes up, that's when we want to jump in because I do like Cisco. Okay. Now, I always tell people, oh, I didn't do my disclaimers, did I? Uh-oh. Okay, so just in case you guys didn't know, I'm not a banker. I'm not an investment broker. I'm not a money market manager. I'm not an investment advisor. I am basically a nobody. I've worked almost my whole life since I was 13. I was one of those latchkey kids. That's what they call us, Generation X. Left on our own devices at a very young age. Figure it out. You want something, go work for it. Yep, that's the life I grew up in. I got my first job at age 13. Okay, right off the school bus, I get right in the back of old man Simmons' pickup truck, and we go off in the woods, cut down trees, do a whole shitload of gardening. Yeah, it was tough work. Anyway, besides the point. I forget where I was going with that. Oh well, don't get old. It's not fun. It's not for the faint of heart. All right, so ooh, check it out. Macy's is on the list, and I do have Macy's Banker 302319. Well, thank you very much for that. That was very nice of you. Okay, so next on the list is Macy's, my favorite stock this year, consistently giving me 2% every single week. And what are we doing today? A little bit down at Macy's. Do I care? No, not really. I'm into Macy's at 1850. Okay, it's at 1842. Yeah, not a big deal. All right, so a year ago, 1580, bottomed out in October around 1056. Topped out at 22, or is that 21? No, 2210. Okay, that was in the middle of March. Okay, the middle of March was the top. Okay, but look where she went from there. Okay, the middle of March, which is the high of the year, down to over here. Okay, now our 30-day bottom is here. We have a new top here, pulled back. Great. Do I have a problem with being at 1850? Hell no. I got over 2% this week. Got over 2% last week. All right, the last 30 days. All right, this is what the last 30 days looks like. So if you take a good look at the chart and tell me what you think the chart is telling you. 30 days ago, 1960. Okay, she dipped down to 1865, shoots on up to the 30-day high. Here's the 30-day high. You can only have one 30-day high. Here it is right there, 2065. From there, 2 weeks later, we're at a 30-day bottom. Okay, 1810 it looks like. From there, she goes up, pulls back, up, pulls back. Here we are now. The 30-day bottom's here. Your 30-day top's right there. We're sitting here. Where do you think she's going to go? Well, more than likely, she's going to go to the upside. Is that guaranteed? No, it's not guaranteed at all. It's just a thought because that's what it looks like we have been doing, and we are the buyers and sellers. So here's a seasonality chart. For those who don't know, the blue line represents the movement for this year. Look at it, basically just channeling. That's about it. The red line represents 10 years worth of data. January 1st, December 31st. What is the average movement based on historical performance? Macy's has been around for over 100 years. They have consistently increased their dividends for more than 5 decades. A few months ago, they had a buyout offer. They said no. Okay, so here's where we are right now. It doesn't look the greatest in the world, but here we go. Here's where we are. So for the next week, we're going to go flat, drop down a little bit, and then middle of July, she's going to pick back up again. Okay, that's just historical performance. That doesn't guarantee what it's going to do, and it doesn't trump the trend. Like that doesn't trump the trend, because the trend is what we are doing. We are the buyers, we are the sellers, you and me. And you and me, we are the buyers and the sellers. We create this mess. The market maker is just there to sell us. That's it. He sells it to us, he buys it from us. That's all he does. Okay, he doesn't have an opinion one way or the other. He could probably care less. What his major concern is how many shares he can trade on a daily basis. Okay, so if 3.5 million shares trade on a daily basis and he gets 2 to 3 cents per share, he's making close to $100,000 a day. Now, very expensive to become a market maker. You just can't walk in and say, hey, I'd like to be a market maker. It doesn't work that way. You got to put your time in. All right. That being said, that is Macy's. I like Macy's. I have no problem holding on to Macy's. Not this dude again, Paul Nicole. How are you doing, Paul? And what do you mean, not this dude again? Paul, I've been doing this since January. If you come here to my channel, yeah, it's going to be me on my channel. Who else is going to be on my channel? Anyway, Paul, nice to see you. Okay? Sorry that I'm not entertaining enough for you there, Mr. Paul, but let's get back to the next one we'll look at. VLO. I forget who suggested VLO last night. VLO is a Valero Energy Group. All right, great. Valero Energy Group, 151 tomorrow morning, 151.14. All right, so the 150s go for 2. The 152s are going for 121. So what am I actually getting? The 150s, 14s. There you go, right there. Yeah, because at 151, if I sell the 150s, I lose $1.14. You take $1.14 off of this, that brings me to 134. Yeah, but 134 on a $150 stock, that's only about 85%. I mean, 0.85. So yeah, you're not quite 1%. You're at 0.85. So what does VLO look like? Well, here's the chart. First thing I want to see. Anytime I look at a chart, first thing I want to see is the high of the year, the low of the year, where it was a year ago, where it is now, and which direction it's going. Well, it's easy to see the direction. Look at that. Okay, it's an upward trend. Great. I love upward trend. Philip, PLTR. It's already on the list, Philip. We will get to it a little bit later on. Can't guarantee if I'll get to it tonight because I got a big, long list. Big, long list of stocks to look at. All right. I'm long an AMD weekly. What do you think? Well, AMD. Well, use your 1272 739. We will take a look at AMD a little bit later. Most likely it's not going to be tonight because I do it as they come and we're still way up over here. So I got all these to go and then all those to go. So more than likely I won't get to AMD tonight. Sorry. All right. So, well, funny thing is, here's the funny thing. Look, AMD I just added, so I'm going to cross it off because AMD is like right there. It's like coming up 2 more stocks. So yeah, it's weird you asked for that. All right, so let's get back to where we were. We're looking at VLO. Okay, so it's giving me under 1% for the week. So if you can deal with under 1%, great. I sold a put on AMD for 150 today. Oh, alrighty there, Al. Okay, first thing I always want to see, the high, the low, where was it, where is it, and which direction it's going. Easy, easy. Okay, great. What do those numbers look like? A year ago, 112, topped out at 184. Okay, from the high of 184 back at the beginning of April, she's sinking. Okay, but look, this is what I'm looking for. Specifically, a chart that looks just like this. Now, you may think that's not a good deal, but look closer. The high back here at the beginning of April, she drops all the way down and finds the bottom right there 3 days ago. You cannot get any lower than the bottom of the time frame. Now, we're looking from April, May, June. That's almost 3 months ago. But the last 30 days, what is the last 30 days looking like? Right there. Okay, this is the last 30 days. 30 days ago was the high. The bottom was right here. 3 days ago. What do I look for? I look for a 30-day high. I look for it to drop, find a new 30-day bottom. Then I look 2 days to the upside. Friday and today, both to the upside. Higher highs, higher lows. Perfect invitation. Come on down and buy some of me, it's saying. Now, I'm not suggesting you do that. I'm just saying, if it looks good to you, VLO, okay, do your research. Make sure it's right for you. Now, I didn't get to go over the parameters, what we're looking for. Now, that created the trading strategy for my 9-year-old daughter back in '08. It had to be simple. It had to be safe. It had to be predictable, consistent, and no way that she could lose. Remember, she was only 9 years old and she wanted to trade just like her dad was trading. She said, Daddy, can you teach me how to trade? Sure, honey. Let me figure out something for you. So, simple, safe, predictable, consistent, and no way to lose. Great. So I got 5 rules. Ready for the 5 rules? Here they come. They're pretty simple. Rule number 1, never buy something you do not want to own long term, or do not buy something you don't understand. Do not buy something that doesn't make sense. All the same. Rule number 1, don't buy something you do not want to own long term, because you just might have to. Now, when I say long term, it means something different to everybody. To me, the longest I've ever held on to anything, I've been trading for over 20 years. The longest I've ever held anything was 9 months. That's it. 9 months is the longest I've ever held anything, because I bought it, it dropped, it turned around, went back up, and it took 9 months to do that. Okay, but here's the thing. I collected a premium and dividends all from the top, all the way down, all the way back out, until I finally sold at a profit. So rule number 1, never buy something you do not want to hold long term. Rule number 2, never sell at a loss. It defeats the purpose. So with that said, I did have 1 loss this year. We are in week number 25, and I average over 5 to 6 trades per account. I have 6 accounts. So I have 1 loss out of over 100 trades so far this year. I don't know exactly how many trades there are, but if you think about it, I get 6 accounts, and then I've been trading every single week. Okay, I do more than 20 or 30 trades per week, and I've only had 1 loss so far, and that was with, hold on, Albemarle. Yep, about $600 in Albemarle. Junior, you want to look at Coca-Cola? I can tell you right now, Coca-Cola has horrible premiums, which means they only give about a 0.5% premium, which, if you like Coca-Cola and you can deal with a 0.5% per week is still 25% per year. Okay, who makes 25% per year? Hardly anyone. So if you like Coca-Cola and you like getting a 0.5% per week, it's simple and easy to do. Okay, if it's offered at 151, okay, if it's offered at 151, you buy it at 151, you sell the 151, and you collect the premium. Does the stock have to move? No, stock doesn't have to do anything. Okay, if you're buying it 151.14, you're selling the 150, you're collecting 244. That's close to. Let's find out exactly what it is. Okay, so we'll clear this. Yeah, 150 is the strike price. Okay, the 150 strike price is selling for 244 plus 244. So that's my sale price, 152.44. What's my purchase price? My purchase price, subtract this, 151.14. So I'm walking away out of this deal for $1.30. Okay, so I'm walking away with $1.30 profit. Great. What does that come to? Well, the $1.30 comes to 151.14, a grand total of 0.86% per week. Seth, dude, I haven't heard from you in days. How have you been? Hopefully fine. Give me a second. I'll address those in a minute, Seth. Okay, so if I like Valero Energy, okay, they're offering 8.6% for the week. So if I buy it first thing in the morning at the current price, okay, I sell the closest strike price, which is the 150, which is already in the money, so getting called out should be relatively easy. More than likely, you will have be back into cash the following Monday, which is great, but you'll be heavy 0.86%. Now, what is 0.86%? Because it doesn't sound like that much, but let's multiply it by 52, because there's 52 weeks in a year. And if you do this every single week and get 0.82% every single week, 0.86, it comes to 45% per year. Now tell me, who makes 45% per year? Probably no one. But if you say safe, predictable stocks, look at the numbers again. Look, here's the high 30 days ago, 30-day high. The bottom was 3 days ago. I like to find the bottom, which is right here, and 2 days to the upside, Friday and Monday, both up days. Great. So that could very well be the bottom of the 30-day period. And if you're going to be making money, you're not going to be making money unless you buy low and sell high. You cannot get any lower than the low of the 30-day period or the low of the year. Jeff, FJB. Now, I'm going to just chuckle a little bit. Uh-oh, what did I do? Uh-oh, hit the wrong button. All right. How many shares do you buy on each trade? Sec, Concrete Steve. Oh, wow. They don't put any spaces between these names, so it looks like all one big word. So Concrete Steve, I like to keep my trades all even. So on a $100,000 count, 5 positions is 20,000, 20,000, 20,000, 20,000, 20,000. Or you can say 1950, 1950, 1950, 1950, 1950, because 98% of my money is invested at all times. I keep a little bit in reserve in case I have to buy something back on Friday. Do you use leverage? David, I have 2 different accounts I share publicly. Now I have 6 accounts. I only share 2 of them. One is all cash. One is margin. Cash is basically cash. Margin is half my money, half my broker's money. So I borrow money from my broker and I have to pay interest on that. And I do tell people, do not do that unless you know what it is you're doing. Now, I've been doing this for 20 years. So to me, it's not a risk. Okay, if I was going to become a banker, yeah, there would be risk there because I know nothing about banking. Seth, okay, you've been away for a couple days, Seth. I'm going to forgive you for it, but let's take a look what you want to look at. Kohl's, okay. Mosaic, okay. Bitto. Oh, okay. No, I didn't sell Kohl's for a loss. I didn't have Mosaic, and I still have Bitto. Yes, I understand the premiums are low, but if you catch them as they're going down, I'll give you my cow analogy, Mr. Seth. You've heard it before. If I get a cow and he's giving me a gallon of milk, great, fine, dandy, wonderful. Okay, if all of a sudden he's only giving me a quart, I'm not going to get rid of him. And how are you doing over here on Instagram? I can't really read that name. I'm going to call you Lem, because Lem G 29. How you doing, Lem? When do they collect the interest for the margin? Troy, that's a good question. I really don't, totally honest with you, I really don't pay attention to it. Okay, so you go down to the monitor and then you go to profit and loss year to date. Go to account statements, profit and loss year to date. Stock buying power, buying options, equity commissions, liquidation, stock buying, blah, blah, commissions and fees. There it is right there. Commissions and fees, $1,379 so far this year in commissions and fees for this particular account. Best stock to invest in. All right, Dylan. I honestly can't answer that question for you, Dylan, because I have no idea who you are. I have no idea what your dreams, aspirations, goals, risk factor. I know absolutely nothing about you, so I cannot tell you what to do. Okay? But you're new here. All I can say is just hang out and chill, see if it makes sense. That's the biggest takeaway you can have from what I'm saying. Does it make sense? I'm sorry, what's the low of the month for Macy's? The low of the month for Macy's, uh-oh. Let me go back to Macy's for a second. Okay, Simone, the low of the month for Macy's was on the 5th, and that was 1808. Troy, I have 100,000 to invest. Where? Troy, I'm going to tell you the same thing I tell everyone else. Okay? Nice that you have 100 grand. 100 grand, 1% on 100 grand, that's $1,000 a week, $50,000 a year. Awesome. You're in an excellent position. You could hypothetically retire with 100,000 if you're making 1% a week. That's 50 grand a year. I cannot tell you where to put it, Troy. If you want my opinion and see if this is right for you, DM me with your phone number. I'll give you a buzz. But just be leery. There are 23. We found 2 more. I think it's 24 now. 24 people pretending to be me. So if you get a call or you get a text or you get an email or you get anything from someone pretending to be me, asking for money, say, hey, meet me up on, what is it? What was it? Telegram, or what's the other one? Uh-oh. WhatsApp. Yeah, I don't do WhatsApp. I don't do Telegram. I don't do cryptocurrency. And I don't ask for money from people. I don't. Okay, I do manage accounts for people, but we have to meet face to face because I'm old school. I don't look you in the eye, shake your hand, and that's my deal. That's it. None of this lawyer bullshit. Nope, I don't do that. I don't play that game. Okay. All right, Seth, on Friday, you mentioned possibly selling a few weaker positions at a loss to a fresh start. Yep, you're absolutely right, Seth. I went over the numbers and it didn't look quite right for me. Simone, you are welcome, my dear. Okay, so like I say, who was that guy who had 100 grand sitting around? Just sitting around. Troy. Yeah, Troy. If you really want to chat, DM me your phone number. I'll give you a buzz. We'll chat and see if it's right for you. This is not right for everyone. This is slow. This is boring. I can't explain how boring it is. It's the same stocks week after week after week after week. There's only 13 weeks in a quarter. There's 9,547 companies. Out of all those 9,547 companies, I only look at 300. That's it. And I look at 300 on a weekly. All right. Request to be on your live. Lem, you want to be on my live? Good. But I'm going to have to, Lem, you're going to have to DM me your phone number because I don't let anybody on the live with me unless I've already talked to them and that I know that you have something to contribute. Okay, I have no problem inviting you on the live. Can you check out Costco? Costco is going to be a no. Okay. Now the reason why Costco is a no because they just don't work. Thanks, Seth. What's your thoughts on AT&T for dividend? All right, we'll write AT&T down. We'll take a look at AT&T. Costco, I'll write it down. We'll take a look at it. COST, isn't it? Costco. Yeah, Neil, it's more than $250. Can I send it here? I don't know. You should be able to. Okay. Len, you should be able to send your number on Instagram. All right, Neil. All right. Costco, what's your thoughts on AT&T? All right, Mikey P, we'll take a look at AT&T, but I got two rows now. See, I'm right about here. No, wait a minute, I'm right about here. Okay, I got to go all this and then all of that. Yeah, so it's going to take a while to get there. Okay, so Al, thank you for that. So who asked for Costco? Yeah, Costco is going to be a no, only because I don't do stocks over $300. Actually, it's over 250. Any take on RTX? Never heard of them. Don't believe in quitting? RTX, I have no idea who they are. Oh, isn't RTX Raytheon? No, wait a minute. Is it? RTX Corporation. Never heard of them. Okay. We'll take a look at it. Not at the moment. We'll take a look at it a little bit later. Okay, next on the list. Ooh, everybody's favorite. Now, people have been watching. We've been watching this thing for months and making money off of it for months. Walgreens, WBA. Yeah. All right, so WBA, 15.15. Check it out, 15.15. The 15.50 is going 10. The 15s are going for 32. Take 15 cents off there, then you have 17. That's still over 1%. Great, you can make your 1% on Walgreens. But let's take a look at it. Look at the high, the low. Where was it? Where is it? Which direction is going? It's going down. Okay? It's going down. So is that good or is that bad? It depends on how you look at it. If you bought it way up here, yeah, it's not good. But if you're looking at it to make a profit off of it, well, yeah, this is awesome. Why? Because you can't get any lower than the low of the year. Look at where it is. The low of the year was last month. And look where it is now. Okay, so let's go over the numbers and take a look. Okay, the high of the year was a year ago, and it was 32.89. Okay, she drops and keeps dropping and keeps dropping and finally finds the bottom right here on the 27th. That is the bottom of the year. Now, everybody tells you buy low, sell high. Well, that only makes sense. Buy low, sell high. Okay? Al, sorry. Al, that's funny. Sorry, Costco's on sale for $867.91. Well, yeah, I don't do stocks over $250. Sorry. However much money you people think I have, yeah, I can't do 1,000 shares at $867. Can't do it. Okay? So, the beginning of April, 90 days ago, look where we are, 1950. We dropped all the way down to 1450. That is the low of the year. Right now, we're at 1515, which is pretty close to the low of the year. Now, think about it. Walgreens has been in business for over 100 years. Over 100 years. They must be doing something right. They consistently sharing their profits with their shareholders. That's what we like. Yeah, with the latest administration, I'm not going to badmouth anyone in particular, but we all know the situation in America nowadays. They're light on crime. They're not prosecuting anybody. It's perfectly acceptable to go and steal crap. I think it's what, nine? As long as it's under $900, you can get away with it. Walk into a store, steal $900 worth of crap, and walk out, and you're not prosecuted. Yeah, Walgreens, which is a matter of fact, one of the Walgreens right up the street from my house, well, not up the street, a couple of towns over, is closing because of that particular reason. It's in a bad part of town, and it's consistently being robbed. And the administration said, no, nope, we're not going to prosecute under $900. So what do you think is going to happen? People are going to go in and steal crap. That's going to happen. It's going to affect the bottom line. It affects the bottom line. What does the corporate say? Corporate says, all right, get rid of the store. It is that simple. Okay? Macy's is the same way. They had the same issue. Okay? Some of the stores were losing money. They're closing some of the stores. Why? Well, because the powers that be refuse to do anything about the crime. That's in California being less than $900. Yeah, it's other places too. Walgreens is tanking. Now, killing them, okay? Now, I'm agreeing with you that the chart says it's going down, but they've been in business for over 100 years. If you're in business for over 100 years and you're continually advertising on TV, something, what you're saying and what they're doing doesn't make sense, okay? Now, I didn't hear about them cutting any dividends. As a matter of fact, let's take a look. WBA. I'm going to take a look at the dividends for Walgreens. Historical performance. All right, historical data. Let's go to historical data. I like historical data. It tells me exactly what's going on with the company. Historical prices, dividends only. Maximum amount. Well, look at that. It goes all the way back to 1985. Okay, so they've been paying dividends and they've been increasing since 1985. Increasing, and this year they've cut dividends from 48 cents to 25 cents. Is that huge? Well, they're over 100 years old and they are having issues. JEPI, Larry Brown. I don't know. Should I pick on Larry Brown? JEPI. I don't like ETFs. That's like saying, I don't want to take care of my money. You do it for me. And then you don't give it to a person. You give it to a computer. David Turner. What's their cash on hand, sales, revenue, profits in the first quarter? Excellent question, David. Oh, I see. But all right, Larry, think of it this way. All right. All right. Now just Larry, don't go anywhere and don't feel bad about this because most people just don't know. JEPI. All right. Now, we're going to take a quick look at JEPI and I'll tell you why I don't like them. All right. Okay. They're paying dividends. Interesting. They've paid dividends since 2020. Okay. What does that mean? That means they pay dividends for 4 years. Yeah. That doesn't thrill me. Okay. Summary on JEPI. All right, hold on a second. Don't go anywhere. Here you go. All right, now, Larry, I just joined. What do you do? All right, AKJ. AKJ, I show people how to get a safe, predictable, consistent 1% per week on their investments. Larry, take a look at this. Okay, now, this chart here is live on YouTube, so you can actually see all these numbers because I point out and you probably can't read them. But this number right here, the yield for JEPI is 7.34%. So Well, let me ask you a question here, Larry, and give me an honest answer. If I can show you how to get between 25 and 50% annual returns, safe, predictable, and consistent, why would you give your money to a computer? ETF, electronically traded fund. JEPI is not managed by a person. It's managed by a machine. Okay? And then you get 7.39% for your money. So, does 7.39% on your money sound good? Or does 50% per year on your money sound better? Okay, so you're relatively new here, so I can cut you some slack. It's not that big a deal. You don't know what you don't know because you didn't know, because the powers that be don't want us talking to each other. That's why they want to shut down TikTok. They don't want people like me showing you how to get 25 to 50% return. Snow, now I can basically say no to Snow, and the reason why, they don't have 20 years of dividends, okay? I like companies that have consistently increased their dividends for consecutively more than 20 years. That means every year, higher and higher and higher dividends. Snow is just not there. Nice. Good info. Thanks. Well, Larry, you're new here. Just hang out and chill, and you're going to learn a lot of nice, interesting stuff. Okay, the only thing I ask is come in with an open mind, and then ask yourself, does it make sense? Okay, AKJ, Coca-Cola, yeah, Coca-Cola's a no. The premiums are absolutely horrible. Yeah, they've been in business for over 100 years, but they're only offering a 0.5%. 0.5% only comes down to 25% per year. But, Larry, 25% per year is better than 7.8. AT&T, again, they have terrible premiums. AGNC, we'll write that down. We'll take a gander at it. AGNC. Okay, right now, we are on AMD. Now, we just finished up Walgreens. Okay, the last 30 days for Walgreens. Here we go. Take a look. You tell me what you think on Walgreens. The 30-day high is right here, 18.25. The 30-day bottom right there, 14.70. Now we're at 15.15. Okay, it's kind of going nowhere. There's no real rhyme or reason to it. When Pepsi first learned options, they think, when people first learned options, I think most important thing is the delta, theta, gamma, and Black-Scholes. Yeah, Michael, you're absolutely correct. What do I recommend? AKJ, I don't recommend anything. I just go over the numbers. IQST, do you know anything about this penny stock up to listing in NASDAQ soon? Okay, yeah, absolutely no, I don't. If they don't have 20 years of increased dividends, I'm not interested in it whatsoever. What YouTube channel can I follow? Okay, now, Larry, I'm here every night, 9:30 to 11. No, sorry, 9 to 11:30. Okay, 2.5 hours every single night. Okay, and I've committed myself to do a whole year of this live interaction. So we are almost halfway through the year. I've been here since the beginning of January. I log all my trades. So you can see every single one of my trades that I have done since the beginning of the year, just to see if it makes sense. So the biggest thing you have to ask yourself is, does this make sense? Are the numbers correct? I'm just reading the numbers. Okay, here's the chart. You can find this chart anywhere. Okay, the last 30 days. There's the high. There's the bottom right there. She goes up, pulls back right there. So what is she going to do next? Well, more than likely, by looking at the chart, more than likely she should go up. But now I jumped in the other day at 1850. Okay, wait a minute. WBA. Sorry, I was thinking of Macy's. Sorry. Michael, do you have to pay to see trades as we can't see them on the website anymore? No, it's a new website. I mean, actually, it is new. Yesterday we could see everything. Today we can't, because I'm in conversation with the website designer to figure it out. And yeah, eventually you'll be able to see all of them again. Okay, Matrix. Forgot that if it makes sense, does it make money? Is the question. Oh, Matrix, that's the question. Okay? So here you go. Make it a little easier for you. You ready? Can you look at NVIDIA? Hell no. Hell no. NVIDIA was $1,200 last week. Do you know what the dividend was on $1,200? It was a penny. NVIDIA was paying 1 penny on a $1,200 stock. Do you know what the book value on NVIDIA is? The book value on NVIDIA, okay, last week it was $1,200. The book value was $2. $2. So if NVIDIA liquidates everything and sells off all their assets and you pay $1,200 a share, guess what you're getting? You're getting $2. That's it. That's the book value. I would prefer to do Ford. Why? Because Ford is below the book value at the moment. What is that, 12 or 15 bucks? The book value on Ford is 14. Look at General Motors. General Motors is in the 30s. The book value is in the 40s. So if they liquidate everything, you're getting more. Why would you do NVIDIA? They're paying 1 penny per share as a dividend. If you're looking at NVIDIA, you're looking for capital appreciation. You're definitely in the wrong place. Depends on how much money you put into the matrix. I did 36,000 in this method last year. Okay, Michael, I don't remember seeing you last year, but that's okay. With AI, they may blow up. Well, have you? Yeah, Ford's 1180. Yeah, with AI. You've also seen the Terminator movies. Do you really think that's not going to happen eventually? Of course it's going to happen. Last week, you did. All right, well, hold on a second here, Mike. What did you say? Depends on how much money you put into the matrix. I did 36,000 on this method last week. Okay, well, what did you make on it last week, Mike? I was speaking of the person named Matrix. Oh, yeah. Okay, that being said. All right, you guys, you got to give me like 1 second. I got to go grab something to drink. I'll be right back. Don't go anywhere. Well, your tail shouldn't be there, dog. Dog. I'm sorry, puppy. Little puppy. All right. Sorry about that. I usually have a drink right here next to me. I'm not used to talking so much. All right. Let's get back to where we were. I didn't say how much. I said, does it make money? And if it's a yes, scaling up is great. Well, Matrix, you're right. Is there a dividend on Ford? Yes, there is. Would you want to live in, girl? Would you want to live in, girl? Okay. Are you back home or still in Florida? No, I'm still in Florida, Felix. Apparently, I'll be here to sometime in July. My daughter's birthday's in July. My son's birthday's in July. My other daughter's birthday's in July. So we get 3 birthdays in July. Would it make sense for me to leave and then come back again? Yeah, no. Do you like covered calls on dividend stocks? That's all I do. Okay, KJ, that's all I do. I look at dividend stocks that have consistently increased for more than 20 consecutive years. Who are they? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Between those 5 lists right there, you can go to Google, Dividend Kings list 2024, Dividend Aristocrats list 2024, so on and so forth. That is over 300 stocks right there. Those 5 lists will give you 300 different companies that have increased consistently. What is a good monthly dividend yield? 1 or 2%? No, I like at 3 to 5%, Daniel. Okay, I average 1% per week, which is over 50% per year. Oh, that hits the spot. All right, so let's jump and take a look at what we're doing next. Next on the list, AMD. Advanced Micro Devices. Okay, so AMD. You got it, Daniel? All righty. First thing you want to look at is what can I buy it for first thing in the morning? 158.21, 157.53 and a quarter, the 160s, 210, even the 162. Ooh, I like that. The 160s, 210. Nice. Okay, great. So the numbers work. So the numbers are giving me more than 1%. Great. So what is the chart telling me? Here's the high, here's the low, here's where it was, here's where it is, and this is the direction it's going. It takes less than 2 seconds to figure it out. It's really not that difficult. Okay, that's the high. Okay, easy. There's the low. Great. That's where it was a year ago. This is where it is now. If you draw a line from a year ago to here, it's in an upward trend. Great. Wonderful. Now let's look at the details. A year ago, 119.78. The bottom, end of October, 93.40. The top, the beginning of March, 227.30. From there, okay, from the high in March to where we are now, it is a downturn, but here's your bottom here. She goes up and pulls back. Great. What happens after that? Well, there can only be one high and there can only be one bottom. So what happens at the bottom? Well, it turns around and goes back up again. Well, that's what she's doing. So let's take a look at the last 30 days. Because that's the most important part. Why? Why is the last 30 days most important? Well, for me, I'm buying on Monday and hoping to be out by Friday. Okay, so if I buy this thing tomorrow morning at 158.21 and I sell the 157.50s, I want to be out at 157.50, which it's already in the money, which is a good probability that I will be out. AutoZone looks good. AutoZone. What's the ticket? What's the ticker for AutoZone? Anyone? It's not one I normally do. No one knows AutoZone ticker symbol. Somebody find that. Okay, so last 30 days. 30 days ago, 166. Topped out 174.10, somewhere in that area. And she pulls back. Here's the 30-day bottom right now at AMD. So you have 1, 2, 3, 4, 5, 6 days to the downside. Great. What's going to happen eventually? Eventually, think about it. AZO, AAP, AZ. All right, we'll take a look at both of those. Hold on a second. So take a look at this. There's the high. There's the bottom. So what's going to happen? Eventually, it's going to find a bottom. It's 6 days down already. So it's going to be 7, 8, 9, however many there's going to be until it finds its bottom and then turns around and goes back up. That's the time we want to get in, as long as they consistently paying over 1% for the week. AZO is expensive. Beebly Weekly, what is it? Because I don't do anything over 250, so if it's over 250, it's going to be crossed out. AZO, almost 3,000 a share. That's a no. Guys, come on. You guys got to remember, all right? Look at the setup I got here, okay? It's a big screen TV in my son's spare room, all right? The walls got to be painted. And all this weird shit. You think I got money to spend on $1,000 share of stock? No, I don't. It's very illiquid. Yep. 10-minute trader is is it good to join? Yeah, you can join, Larry. DRI, what do you think? They're going to be doing a dividend income 620 Olive Garden. DRI. Does anyone know anything about DRI? I joined and like it very much, Larry. All right, Beaver Weekly, thank you for that very much. Yeah, Larry, just in case you're wondering, I do a live trading show every morning. Okay, I do a live podcast. The podcast is me actually trading my accounts live. Okay, it's the Olive Garden. All right, I'm going to say no to the Olive Garden. Reason I'm saying no to the Olive Garden, because they don't have 20 years of increased dividends. Just a waste of our time to go over at. Okay, so as I was saying, the live trading show, okay, it's on a Zoom call through Patreon, okay, not 10-minute trader or dividend stock talk, one or the other, okay. Monday, Tuesday, Wednesday, Thursday, we're on at 9 a.m. until you guys are done asking me questions, because I'll go over every single question you guys have. I don't mind, because I'm kind of enjoying this. I'm retired. This is my new activity, okay. Got to keep myself busy somehow. Okay, send a link. Larry, it's easy for you to send a link. There's a couple thousand people coming through here. I'm not going to know exactly where you are. Best bet is to click up here on my bio. Okay, it'll take you to that 10-minute trade. Send me a DM. I'll give you a buzz. Because, Larry, it may be for you. It may not be for you. This is not for everyone. It's slow. It's boring. It's consistent. I look at the exact same stocks every quarter. There's 4 quarters in the year. 13 weeks in each quarter. Okay, week number 1 in quarter 1 is the exact same as week 1 in quarter 2, quarter 3, quarter 4. All the exact same stocks over and over and over again. But that's what you're looking for. Well, great. give me a buzz. Oh no, DM me your number. I will give you a buzz. We'll sit and we'll chat. All right. A lot of knowledge. I got a lot more to go, Larry. All right. So AAP. What is AAP? All right. Now I got AAP written down. All right. AK. Who asked for AAP? Jeff, ExxonMobil. I think we already looked at ExxonMobil today. Yeah. I don't know. Did we? AAP is on the list. We'll get to it. Jeff, you want to look at ExxonMobil? I'll write that down. XOM is most likely not going to be today because I got way too many stocks to take a look at. So I'll do one much better. Justin Time Web. Okay, Starbucks. We already looked at Starbucks. Okay, we already looked at Starbucks. So we probably won't get to Starbucks again until tomorrow or Wednesday. All right. This is a 390 on DE covered call for next week. Chipotle, nope. Chipotle's a no also. So you want the dividend to pay for the potential loss on a covered calls? Absolutely not. Okay, burn. What is that, right? Burn the turn. Costco's way too expensive. Costco is solid, but near 52-week high. Well, there's your answer right there. Do you think Q's is going to become bear? Don't know, don't care, because it doesn't fit in this trading strategy. I only look at dividend stocks that have consistently increased their dividends for 2 decades or more. Pepsi, awesome. Dividend king, wonderful company. So that's no to John Deere at 390. Okay, Sinba, yeah, I don't do anything over 250 because it's just out of my price range. Pepsi, we'll take a look at Pepsi. Oh, let me get back to my list. You guys keep hitting me with all these things. What about O? Why is every week someone says something about O? O is a no. It is a plain old flat no. O, although they pay monthly, the premiums are absolutely horrible, and it's a monthly, and the yield is absolutely horrible. So no restaurants like Darden become COVID hit the restaurant 4 years ago. What is the price range? Below 250 bucks. What should I invest in my $1,000 for? I already regret this. Yeah, I can't help you out. Okay, because I don't know who you are. Okay, I can't tell you what to do. O is monthly. What don't you get about the criteria requirements? Thanks, Al. BGFV. Never heard of it. Ingersoll Rand. Ooh, that's a good one. IR. Okay, but does IR have weekly options? I don't know. Jeff, BGFV? BGFV. I've never heard of them. Now, Jeff, let me just, quickly give you a couple of tidbits. Okay? What premium is good? Over 1% is good for me. That's what I like. I like over 1% premium. Okay, because over 1% on a weekly basis gives me over 50% per year. All right. Now, Prenimu, is that right? Prenimu? What do you recommend? What's your favorite this month so far? Well, Macy's is my favorite so far this year. All right, so let's see if I can get you guys to understand this. I've been trading for over 20 years. Okay, now in 08, okay, in 2008, my daughter comes up to me when she was 9 years old. She said, "Daddy, can I do that too?" So, how do you say no to a 9-year-old? You really don't. Thanks for that, Stu. Very nice, very mature. So, she asked me if she could do the same thing. I said, "Great, let me come up with a strategy for you so you can do it also." So, here's the thing. This is what I came up with for a 9-year-old little girl. It had to be simple, safe, predictable, consistent, and no way for her to lose. So no way for her to lose, that's always a big one for most people. So here you go. Never buy something you don't understand or don't want to hold for a long period of time because you just might have to. Number 2, never sell for a loss. Number 3, make sure there's 20 years of increased dividends. Weekly options, and then the numbers got to work. What do I mean by the numbers? The numbers, what can I buy it for? What can I do a covered call for? And is that 1% or more? Okay, Lilly is the best. Macy's has only had a dividend hike in 3 years. Macy's has been in business for over 100 years. I'm pretty sure they have been a dividend king for the past few decades. Well, let's quickly find out. Going to Yahoo Finance, going into the historical data, prices, dividends only, $17.17 this year, maximum $17.38. Oh yeah, they did cut it. Okay. Now, okay, so Macy's cut their dividends from 38 back in 20 to 15. Yep. And then they've been increasing slowly. 2021, they did a dividend cut. Yes, I saw. I'm looking at it right now. Okay, this is the data from Macy's. Now, like I said, Macy's been in business for over 100 years. There's few companies I cut a little bit of slack. Macy's is one of them. When you buy Monday stocks, do you buy equal value each stock? I try as best I can, Hal. Okay. Now, usually I have 5 to 6 positions. Okay. Now sometimes I sell 1, sometimes I sell 2 or 3. Okay. Once in 20 years, I sold every single stock in the week, and then I had 100% cash the following Monday. This only happened once. Okay. But this week I didn't. Last week I didn't sell anything, so I brought over everything from last week into this week. Now, like I said, I shared 2 accounts with you guys. One account I made over 1%. Great. The second account I didn't make 1%. Okay, because sometimes when you carry a stock over from one week to the next, as the stock drops, the options value drops also. Bob Mob Limited Liability Corporation. Interesting. All right. All right. So AMD, if you like it. So keep an eye on AMD because we've got 6 down days in a row. So we're going to find a bottom pretty soon because there's a bottom everywhere. Okay. Eventually there is a bottom. You have the high of the year. You have the low of the year. At this moment in time, we're looking at the 30-day bottom, which was today. So we zoom out a little bit. Okay, the bottom of the year for AMD is 93.69, and that was back in October. She went up on the high of the year. She came down, the low of the 90-day period, back up, and now we're down at the 30-day bottom. I like 30-day bottoms. Have you heard of Morrowcoin? Nope. What if you lose money on a covered call? Okay, AKJ. All right. Now remember what I told you. Hold on. Criteria number 5. Okay. Simple, safe, predictable, consistent. No way to lose. Okay. The only way you lose money is if you sell for less than what you paid for it. Okay. Rule number 1, never buy something you don't want to hold. Rule number 2, never sell at a loss. So if you never sell at a loss, how can you lose? Okay, now, give you a perfect example. Last July, as a matter of fact, Target, TGT. Okay, I'm going to go right from here, right to there. Okay, Target was one of the happy companies I carried for 6 months. Did I want to carry for 6 months? No, but let me show you what happened. I jumped into Target at 135, right here. And then I took it all the way down to here, 102. So I bought it at 135. Now, in October, it's 102. Okay, then we get to November 13th, right here, it was at 110. Overnight, she jumped 16 points. Okay, I lost $12,000 right there. Okay? That's what you call a black swan event. How often do they happen? Well, they happen once or twice a year. Different companies, not always the same company. Okay, Target went from 112 up to 132. Okay, I lost 12 grand right here. I held on to the stock all the way into December. So I had it from July to December, and I basically broke even. Okay, all the premiums I've collected, all the dividends I collected, I lost right here, and then I was in the negative here, and I had to keep going and going and going until I finally broke even. But doesn't options expire if you keep holding on to it? You're absolutely right. That's exactly what I want to happen. So let me explain it to you in another manner. A target at this moment in time is at 144.97. See, 145 is what I can buy it for first thing tomorrow morning. 145. If I sell the 145, I'm getting 138. That's a little bit less than 1%. If I go to next week's 145 is 229. That's over 1%. Great. That's what I'm looking for. Now, if I buy the stock, I always own the stock. There's no expiration date on a stock. All right. But when I sell an option, and a covered call is what you buy the stock, you sell the option. You're basically selling someone the rights to buy it from you for the exact same price you paid for it. Well, great. If I pay 145 for it and I sell somebody the rights to buy it from me at 145 and I make 1%, great. What does the stock have to do? Absolutely nothing. Okay. I hold on to the stock until it goes above 145. Then whoever bought that option buys the stock from me at 145. I'm back into all my cash, and that little premium right there, I collect that. That's my fee. All right, it's my fee for doing a service for whoever it is. So if I buy it at 145, sell it at 145, collect $1.38 for doing that, that premium is mine to keep. Hakuna, how are you doing over there on Instagram? Poseidon's Last Mola, please explain they lost 12 grand in the bump up on Target. Well, you want me to relive that? Okay, fine. Let's do it. Oh, that is good. All right. Let's go back to Target. All right. All right, here we go. Back to Target. You ready? James, as you sold premiums to break even, were you still selling the options at the money or close to it? No. Whenever I sell an option with a stock that's going down, okay, so I bought it at 135. First week, I got right around 2%. Second week, I got like 1.5%. Third week, as the stock is dropping, and I'm still selling the 135s, I'm getting less than 1%. Now I'm down here at 120. I can't sell the 135s anymore. So I sell the 127s, the 125s, 5 strikes out of the money because the stock's not going to jump up that much. Okay. Is Target a hold 3.1% dividend yield? Okay, I'm not quite sure what you're talking about. You get the dividend on options. All right. You get the dividend if you own the stock. If you're buying the option, no, you don't get the dividend. Are retail companies more risky? Felix, you have to give me more specific. Okay, so let me finish up with Target. You ready? So I'm at 135. Okay, first week 2%, second week 1.5%, third week 1%, fourth week less than 1%. By the fifth week, we're at 125. All right, I'm selling the 130s, which is $5 less than what I'm in for, but 5 strikes out of the money. So as she's dropping week after week after week, I'm collecting premium, 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 premium. And then down here, okay, Monday was the 11th. Tuesday was the 12th. Wait a minute. Tuesday was the 12th. The 13th is when she jumped up. Okay, so on Monday, I sell the 112s. Okay, so I collected 50 cents. Okay, crappy, but still some cash coming in. So when she jumped overnight from 112 to 126, or whatever the heck it was, okay, the value of the option that I sold for 50 cents is now worth $12. Hence the $12,000 loss. So I had to buy it back. Okay, that 50, I collected 50 cents. Okay, now 50 cents on 1,000 shares is what? 50 bucks maybe? Something like that. Okay, but then overnight, she jumps up. Now I have 10 contracts, which is 1,000 shares at 135. Okay, so if I didn't buy them back, okay, whoever bought the option at 112 would have bought the stock from me at 112, and I would have lost 25, yeah, something like $25,000. So it's either pay 12 grand, keep the stock, or lose 25,000. So I paid the 12 grand. Okay, as it gets up to here, I'm still selling the options, and I finally break even. So the risk comes in is as the stock is going down, and if you lower the strike price for lower than what you paid for it, that's your risk. Okay, Gud. Hey, nice to see you again. Shorted M Bio, I never heard of them. Okay. How frequent must the companies pay dividends per year for you to be interested in? Well, when a company pays a dividend, they have several choices. There's some companies that pay once a year. Some companies pay twice a year. Most companies pay 4 times a year, and there's a few that pay every month. So I really don't care how often they pay their dividend, as long as they consistently increase it year after year. Good. $500 at 50 cents, 10 contracts. Do you dollar cost average with the premiums throughout the week and reinvest? No, I live off of my premiums to avoid that from happening. Yeah, you can't avoid. There's no possible way for you to avoid a black swan. No way at all. They just happen. When they happen, they happen. Okay, so wouldn't you just hold the stock until it goes back up? Well, that's exactly what I did. Wonder if we were able to set up an auto buyback when you sold option doubles the value and roll out. Well, Michael, you got to remember, I do this twice a day. Okay, in the morning I have the trading group, which we trade. I trade 6 different accounts, but that's besides the point. Okay, we trade every morning. Then at night, I'm here looking at the same things all over again. So I get a good idea of where my positions are on a consistent basis. But that's me. You guys are different. You guys got to figure out what your money means to you and how often you want to look at it. Because if you look at it every day, it can drive you crazy because it goes up, it goes down, up, down, up, down all day long. Hey, it's Rad. I didn't forget to send you my information and what we talk about. Okay, I don't really know what you're talking about there, but okay. I have July Microsoft at 125. Would you buy it back at 150? RCMT. Let me tell you something that a lot of people have a difficult time grasping. Okay, take it for what you want. Okay, it's not a profit until you take it. Nobody ever went broke taking profits. However you want to look at it. If you bought it at 125, it's at 150. You got to. Here's your choices. Take the profit. Don't take the profit. That's basically what it is. Okay, if you don't take the profit and you gamble and you're hoping it goes higher, yeah, it might. It might not. That's all stocks do. Is they go up, they go down. That's all they do. They go up, they go down. That's it. Nothing goes up forever. Okay? Eventually, there will be profit taking. There always is. So let's pull back on this one for a second and just quickly show you. This is Target. Look, going up, down, up, down, up, down, up, down, up, down, gapped up, That's the one I had the privilege of being a part of. Okay, went up, pulled back, up, pulled back, up, pulled back, up, up, down, up, down, up, down, up, down, up, down. That's all they do. They do not come to your house, make your bed. They do not put any little candies on your pillow and tuck you in at night, sing you a lullaby. No, they go up, they go down. If you're in a profit, take it. Don't take it. It's your choice. I can't tell you what to do. Okay? I have no idea who you are. I have no idea what your risk factors are. I have no idea what your dreams and all that kind of stuff is. And I don't know if you're vindictive. If I tell you to sell it at 150, you sell it and it jumps up to 200, you could sue me for the loss for crappy advice. I don't give advice. It's your responsibility. It's your money. Okay? If you bought it at 125, it's at 150, you have a $25 profit margin there. Take it, don't take it. It's your choice. Okay, sell a covered call, get a little bit more money. It's totally up to you. I share with you what I do. I post my trades. You can actually see what I do. And you know what my goal is. My goal is a safe, predictable, consistent 1% per week. So if I buy it at 125 and it goes up to 127.50, I'm out. That's my 1%. Because I look at 300 different companies. Now, out of the 9,542 companies, yeah, there's only 300 that increase their dividends every single year for more than 20 years. It's only 300. That's all I'm interested. I'm not in. You want something funny? All right, here you go. This is what you guys had me look at this week. Oh, Sunday and Monday. That's yesterday and today. All right. That's last week. That's the week before. That's the week before. I got all these pages of companies that you guys have me look at. Now, I can tell you that out of all this crap, and I can call it crap because most of it is crap. Hey, look at this. Someone's giving me a treat. Oh, that is so nice of you. Thank you for that. Most of the stuff is crap, in my humble opinion. You may not think that, but the way I'm looking at it is I have a certain strategy. And now I am so old school, it's pitiful. I actually write stuff down. I don't do that computer crap. I don't. Because, call me weird, whatever. I really don't care. Honestly, I don't. Okay, I come from a time in time in our history. Okay, I come from a time in our history where we looked people in the eye, we shook their hands, and that was it. Also, if this is a belief that I have, if it ain't broke, don't fix it. This trading strategy was created for a 9-year-old little girl. She was not a Mensa student. She was just your average, everyday little girl. That's it, just an average girl. It had to be simple, safe, predictable, consistent, and no way for her to lose. So the 5 rules are relatively simple. Never buy something you don't understand, you don't want to own, whatever the reason is, but make sure you want to own that company. Number 2, never sell for a loss. Make sure there's 20 years of increased dividends, weekly options, and then make sure the numbers work. The numbers. What am I buying it for? What am I selling it for? Am I getting my 1%? How consistent are they with their dividend increases? NVIDIA keeps going up. I really don't give a dead rat's flying carcass about NVIDIA. NVIDIA has an absolute horrible ROI. Okay, they're a $2 stock company. You take a look at the book value, you sell off everything NVIDIA owns. $2 a share. That is the book value. Ford has got a $14 book value. In their stocks, it's only $14. Is that what, 11 bucks? General Motors is in the 30s. Their book value is in the 40s. Why would I buy a company with a $2 book value? Let's say, whatever reason whatsoever, the government comes in and says, all right, you got to liquidate. Fine, they liquidate you at $2. That's it. What's the dividend on NVIDIA? NVIDIA's dividend is 1 cent. Okay? When the stock was at $1,200, you know what the dividend was? 1 cent. You know what the book value was? $2 per share. They did a 10-to-1 split. What is the book value? $2 a share. What is their dividend? $1. Nothing much has changed. They just dropped the price so it's more affordable for people to buy. Fine, buy it. Be my guest. Do what you want. I'm not into capital appreciation. Safe, predictable, consistent 1% per week. That's all I care about. Really. I'm not going to put $5,000, $10,000 into a company and hope it goes up. Nope. I've already been past that point in my life. Okay. I did the learning. Okay. I went to school. I got in the job market. I've been working since I was 13. I got a little bit of money to play with. That little bit of money makes me a comfortable living on a weekly basis. 1% per week takes care of all my bills. I can hang out with my kids. I can hang out with my grandson, do whatever I please, whenever I please. I can go wherever I want. Okay? I don't need to go from, what is it, 130 now? And it might shoot up. Big deal. I'm not interested in that. Altria, okay, Parkus, Altria is on the list. We will take a look at it. Okay, I like Altria. They're a dividend king. They've been in business for a very long time, consistently increase their dividends. I like Altria. That's what I'm looking for. Well, Larry, if that's what you're looking for, hang out. The most important thing you can get from this, okay, most important thing is, does it make sense? Target, TGT, okay, it is a dividend king. They've increased their dividends for more than 5 decades. They've been in business for over 100 years. Are they going anywhere? Probably not. Did they have a problem at the beginning of this year and the end of last year? Yeah, they did. They'll get it ironed out. They'll get it figured out. British Petroleum had a whole bunch of crap happen when they had the leak. You know, the leak oil all over the place. Yeah, people go up in their arms, all that bullshit. They clean up the mess. They paid their fines. They're moving on. ExxonMobil, exact same thing. Remember the Valdez spilled all that oil up in the Northwest? Yep. They got the slap on the wrist, paid huge fines. They're back in business. Everything's moving along. Please check questions on Instagram. I thought the amount of times was important for you since you said that you sell a call 2 weeks before the dividend. Yeah. Okay. How frequent must the dividend pay per year? No. How often they pay per year is irrelevant. It's either one time, twice, 4 times, or 12 times. Sometimes they throw in an extra dividend if they have extra money. Okay? But it's the consistency of the amount of years they consistently increase. How are you, bud? My shoulder hurts like hell. I was working on the motorhome. You know, I'm looking to buy a motorhome so I can travel, and I was trying to change a tire. Now, changing a tire on a car is one thing, you know, because the tire is about this big around. Okay, like a 15-inch. I got 15-inch tires on my van. Okay, great. These things are 22. 22. That's the rim. So the tire is like it's freaking huge. And I broke my collarbone a couple of weeks ago, and I aggravated it today, trying to move it around. I shouldn't have done it. How do you sell plus make the dividend? Okay, RJ30. Hey, you're back again. I've seen you a couple of weeks ago. Your resonance. But then you can't always sell calls 2 weeks before the dividend payout. Actually, you can. Poseidon, how were you able to buy your way out of Target for $12,000 when the other party had a $25,000 gain? Oh, hold that thought. That hits the spot. That is good. All right. It's a good question. Okay. So here we are at Target again. Now, when you sell an option, okay, so you buy a stock, you own the stock, okay? Here's the numbers up here. That's the stocks. Down here are the options, all right? Now, you may not know this, but the market makers are not all evil, okay? So when the stock jumped, okay, overnight on a Wednesday, it jumped $16. I get a notice in my phone. Your position is in jeopardy of being called out. Basically, what do you want to do? I got an email saying, hey, you need to take care of this, buddy, right now. So I went in, I looked at it, said, fuck. That was my expression. Because when this happens and you lose $12,000 when you wake up in the morning, so how the hell did that happen? So the person who bought the option, okay, they have the right to exercise it, which means, okay, hey, I bought it for 50 cents. Now it's worth 12 bucks. I want to sell it. Great. That's his option. But I still have the opportunity to buy it back to keep my shares. Okay, so if I didn't keep my shares, I would have lost 25,000. So do I lose 12,000 or do I lose 25,000? Now, the market maker is not a dick or whatever you want to call the female version of a very bad person. Okay, I get the message. Okay, your shares are in jeopardy of being called away or being exercised. That's it. Had I ignored it, 2 days later, I would have lost 25 grand. But no, I took care of it right away. So, no, his sold call got filled. Okay, GD, the covered call to shares. Yep, blah, blah, blah. Converted. Yep, blah, blah, blah. So, anytime you do a trade, okay, anytime you do a trade, all right, you have opportunities to correct it. If it's a mistake, if you want to do something, the market maker or your broker will call you up and say, hey, what do you want to do about this? If you do nothing, because they have what's called a 2-day settlement. Okay, a 2-day settlement is, okay, this happened on a Tuesday. I got 2 days to fix it. That's it. After 2 days, they'll take care of it for you. If you ignore it, somebody will take care of it for you. Don't worry about it. What do you think about XRP? I don't think about that at all. XRP is not a stock. It's one of the little coin thingies. Isn't the first day settlement now? No, they still have 2-day settlements. Okay, in a situation such as that. All right, what time are? Oh, we're at 11 o'clock. Holy cow. Still waiting for AAP. Oh my goodness. Let's go to AAP so I can tell this guy no real quick. Advanced Auto Parts. Sha-la, Advanced Auto Parts. Here we go. 64.40. The 65 is going for 73 cents. Cool. Like it. The high, the low, where was it? Where is it? What direction is it going? Boom. There you go. Let's take a close look at the numbers. Ready? A year ago, 69.02. Bottomed out the end of October, 47.03. Topped out 88.73. That was the end of March. Now we're in a downturn. There we go. Okay, so from the end of March, the high. Here we are right now. The end of March. She drops, recovers. Drops, recovers. Drops, recovers. Big drop. Recovers. Back down. The bottom was... Okay, we have a new bottom here, but it's not a 30-day bottom. It is a low. It's SCHD. Since TOS is on the back, just added that to my portfolio. Okay, Picaris. SCHD. You're one of those, aren't you? And what do I mean by one of those? SCHD is an electronically traded fund. Basically, that means I don't want to take responsibility for my money. You do it. That's basically what you are. Okay? Think about it. SCHD is an electronically traded fund. We're going to pick on you just for a little bit because I'm in the mood to pick on you. But let's finish up with Advanced Auto Parts first. Okay? Last 30 days. The 17th. Here we go. Right here. 30 days ago was the 30-day high. She drops down. Here's the 30-day bottom on the 28th. She shoots back up, back down again, shoots back up, back down again. Where do you think it's going next? It's telling you right there. Down, up, down, up, down, up. That's what's telling you. Picaris, but the dividend is good. Really? Wow. Oh, okay. The dividend is good. SCHD. Number one, it is a monthly. Do you know what that means? Monthly? That means there's only 12 months in the year. If I buy it at 77.34, sell the 77s, I'm getting 50 cents, which is less than 1%. If I don't make my cut this week, I got to carry it out another 5 weeks. 5 weeks. Now I got to figure out where it's going to go in 5 weeks. Okay, what am I getting in 5 weeks? 5 weeks, I'm getting 85 cents, just over 1%. 1.2 to be exact. 1.2 for 5 weeks. 5 weeks, 1.2. Let's pull up the calculator in case you don't understand what that means. 1.2% divided by 5 weeks comes to a grand total of 0.24 per week. Now, I'm showing you how to get 1% per week, but you would prefer 0.24. Excuse me. You would prefer 0.24% per week. Okay, great. Let's give you that one. All right, so let's go to Yahoo Finance and put in SCHD. Tra-la-la. Here we go. All right, let's go all the way back to the beginning. Okay, 2011. What does that mean? 2011, we're in 2024. What does that mean? 13 years of increased dividends, and you think that's good? Let's pick on you just a little bit more. 12 cents, 14 cents, 21, 26, 20. It went backwards. 23, 22, 25, 27, 20, backwards again. 28, 27, backwards again. 31, 30, 27, backwards again. 30, 32, 24, backwards again. When you're buying a dividend stock, you want the dividends to increase, not decrease. So it goes from 30 to 32 to 24, backwards, to 40, ooh, backwards to 33, to 34, to 35, to 26, backwards again. 41, 37, backwards again. 41, 35, backwards. All over the place. No consistency on the dividends whatsoever. Oh, but they're wonderful. Okay, let's go at summary. The summary for SCHD, grand total of, are you ready for this? Drum roll, please. 3.4% per year. That's what you're making. And you're telling me the dividends are wonderful? 3.4%. You're putting your money into a machine, ETF, electronically traded funds. Here, I don't want to be responsible for money. You do it. Give me a bunch of crap. You're giving me 3.4% as a yield. I'm showing you how to get 1% per week. Now, where I went to school, 1% per week is 50% per year, but you're perfectly happy with 3.4%? Explain to me in a manner in which I would understand why, where, why, and how 3.4% is better than 50%. Please, I'm waiting. Okay, so as you can plainly see, I don't like ETFs because they don't pay worth a crap. And people who give their money to a machine to do the trading for you, just ask the question. You asked my opinion. My opinion is it's a piece of crap. Okay? Now, monthly, yeah, unless they're giving 4 or 5% per month, okay? Unless they're giving 4 or 5% per month, I have to guess where this piece of crap is going in the next 5 weeks. I have a hard enough time figuring out, look, here we are, last 30 days. Here's your high, here's your low, okay? High, low, up, down. Now it's going to the upside. Great. Where's it going to be in 5 days? That I can figure out. Next 5 days, hypothetically, she should be around 78, hypothetically, in the next 5 days. But if you're doing a monthly, where's it going to be in 5 weeks? How the heck am I supposed to know where it's going to be in 5 weeks? I have a hard enough time trying to figure out the next 5 days. That's why I don't do monthlies. No CEFs, but I don't know what a CEF is. All right. It felt good to get that out. I didn't really mean to pick on you. It's just that a lot of people are sold crap. Okay, because you go into a bank or you go to some place and say, hey, you're supposed to know more than I do. Help me out. Great, we got this piece of crap. Do you remember do you know who Susie Orman is? Okay, that mightier than owl. Okay, she gets on and she gets these exorbitant speaking fees to speak about what to do with your money. She comes out and actually tells you, when I worked at Wall Street, I sold crap to people. Literally, I sold them crap. So you're buying someone else's crap. Think about it. If you take responsibility for your own money and CHD, oh, even better than this. I didn't do this. Watch this. You ready? You're going to like this. CHD. We're going to go into the holdings right here. We'll tell you exactly what is inside CHD. Okay, so here you go. You ready? Texas Instruments, AMGN, Lockheed Martin, Pfizer, Chevron, Coca-Cola, Pepsi, Verizon, Cisco, BlackRock. They're individual companies. You could do those on yourself. Let's go take a look at one. Let's take a look at Pfizer, just for the fun of it. PFE, Pfizer, 26.94. The 27s are going for 20 cents, 27 cents. That's 1%. That's just Pfizer. If I did Pfizer every single week and got 1% every single week from just Pfizer alone, it's 1%. It's right there. 26.94 purchase price. You sell it to somebody else for 27. Okay, you're buying it for 26.94. You're selling for 27. What is that? 6 cents difference? But you're making 27 cents. 27 cents is more than is 1%. And that's 1% for the week. Great. Let's do it again. Okay? Because it does it every single week. Okay? But is it the right time to buy Pfizer? This is an interesting question. Not the right time to buy, but we'll keep an eye on it because look, here's your high. Here's your 30-day high. Look, 1, 2, 3, 4, 5, 6, 7, 8. 8 days in a row she's been down. But here's the thing. How far down is it going to go before people like you and me say, wait a second, Pfizer is worth a hell of a lot more than that? It hasn't gotten there yet. Because when it does, you'll notice it will start turning around and go back up. But that's just Pfizer. Let's take a look at another one. Oh, Lockheed Martin. You know who Lockheed Martin is. LMT. Lockheed Martin. Ooh, I like that. Check it out. Lockheed Martin. 459, 459.99. The 460s going for 220. That's a 0.5%. Even a 0.5% for Lockheed Martin. Look, 459. I sell it at 460, which is basically the exact same price. Okay, what is it? 1 penny off. Really, you're gonna argue about 1 penny? But at the 460s, it's 220. That's about 0.5%. 0.5% every single week, 52 weeks in a year. That's 26% per year. Hell of a lot better than the 3.6 that SCHD is giving you. Okay, you don't like Lockheed Martin? Let's find another one. Ooh, Texas Instruments, TXN. TXN. Okay, 195. The 195 is going for 178. That's 0.8. 0.8 times 52. What's 0.8 times 52? Clear. 0.8 multiplied by 52 times a year comes to a grand total of 41.5%. All right, now, just doing it on your own, I showed you 3. Okay, the first one I showed you was giving you 1%. The second one I showed you was giving you 0.5%. The third one I showed you was giving you 0.8. All right, but yet you want to say, here, give my money to the machine, let the machine do it for me. Yeah, I don't trust machines as far as I can throw them. Hey, your residents, thank you for all that. I got it. Oh, you cheap bastard. Who gets that's not even a dozen roses. That's 11. Who gets 11 roses? Serious. Thank you for that. That was nice. Thanks. Oh, look at it. You gave me one earlier. So I do get my dozen. Yay, I got a dozen roses. All right, so that works. Yeah, my wife. Yeah. I was watching Mike and Molly. I like Mike and Molly. So, yeah. You give me some of those roses. Yeah, all right. I get 1 rose. Elegant. Yeah, 11 flowers. Okay, what do we got here? You said before you sell calls 3 or 4 times a week. Why not instead sell for a larger amount and only sell calls for one company instead? Less work. It doesn't work that way, Acuna. Sorry. It's all about the numbers. Okay, so I look at. Let me pull up my calendar so you guys can grasp this a little easier. Let's pull up Warren Buffett's list so that you guys get a better idea. Okay, so here's Warren Buffett's list. Okay, please check my question about. Yeah, I just did. Okay, so this is Warren Buffett's list. Okay, Kraft Heinz. Everybody knows who Kraft Heinz is. They make ketchup, they make Kraft macaroni and cheese, all that kind of stuff. Bank of America, General Motors, Coca-Cola, Boyd Gaming. That one you may or may not heard of. Okay, Hewlett Packard, Occidental Petroleum, Paramount, Mondelez, American Express, Globe Life. Out of all of those, you probably haven't heard of one of them, and that's probably Boyd Gaming. All right. What if no one buys your options at the strike price you talked about in your video? Oh, Parkus. Okay. Picaris. I don't know how you say that. All right. Trade right here. Okay. Now, just to give you a little tidbit on rules, regulations. Okay. The stock right up here. The last price of the day. That was today's last price. The bid, the ask. The bid is what I can sell it for. The ask is what I can buy it for. The spread, the difference between the bid and the ask. The spread, that goes to the market maker. The market maker. Let's think of the market maker as the corner store owner. Okay, 7-Eleven, Circle K, whatever store you have at the corner. Everybody has a corner store. Okay, there's a corner store. Some guy owns it. His job is to make sure there's milk, bread, eggs. He buys them at a certain price. He sells them at a certain price. His profit is what is called the spread. Here's the thing about the spread. If it is marked, if it is advertised, it is his responsibility to fill it immediately if you do a market order. A market order, he is required, and it is a law. If you're a market maker and you post this, this is what I'm selling it for, this is what I'm buying it for, that's what you get. So if it is posted and you ask, say, hey, I'll take that at the market, it fills instantaneously. Now, if you do a limit order, say, all right, I want 191. Hey, it says 190 here. No. I want 191, not 192. That's a limit order. It means I'm not going to sell it for less than 190, 192. The market maker doesn't have to fill it if he doesn't want to. But at the market, he does have to sell it. Okay, so there is no what if. If it's listed, he's required to fill it if it is a market order. If it is a limit order, he doesn't have to fill it if he doesn't want to. I meant instead of selling calls for 3 companies, could you sell 3 contracts in the same company? Why not? Well, that's an interesting question. I'll give you a for instance. Okay, AEO. I have 2,700 shares, so I'm selling 27 contracts. Okay, Kohl's 1,600 shares, so it's 16 contracts. Lowe's, it's 4 contracts. Macy's, it's, what is Macy's? 2,000 contracts, so on and so forth. So I learned a lesson a long time ago. Okay, huge lesson. You ready for this? Some of you guys are going to get a kick out of this. Does your strategy always involve options? Alejandro, yes, it does. That's all I do. I buy stocks. I sell options against them. It's called a covered call. It's one of the safest trading strategies out there. You buy a stock, you sell somebody the rights to buy it from you for the exact same price you paid for it. You collect a premium. That premium is usually, in my case, 1% or more. Now, you guys are going to get a kick out of this, and this is going to answer your question. Okay, your eminence or Hakuna. Okay, now I don't buy all one company and sell all one company. The reason being, back in the gold rush of the .com era, I bought a company called Real Networks, RNWK. Okay, it was at 330. All right, it jumped. I think it was like 30 points with no news whatsoever. So I'm scouring the internet trying to figure out, why did this company jump 30 points on no news? Great. It was a Friday. First thing Monday, I knew deep within my heart there's going to be profit taking. I bought a bunch of puts and I sold a bunch of naked calls. What happened? All my money was in one position because I was bound and determined to be right because it made sense to me. First thing in the morning, she jumped up 45 points. Now I'm out $91,000. Wake up time. As far as I know, at this point in time, I am the only person that I've ever heard of. Yeah, thank you for that. I'm the only person that I ever heard of who got a phone call. Mr. Gardino, yeah, you're done. That's what my broker said. Not, hi, how are you? How are things going? Mr. Gardino, you're done. We're liquidating your positions to pay off your debts. I'm the only one who's ever gotten that phone call, as far as I know. Yeah, so no, never put all your eggs in one basket. That's why I have 4 to 6 positions every single week. I learned my lesson, and it was an expensive lesson. Okay? There has to be a downside. There's never no risk. What's the catch here? Okay, Pakaris, when I say no risk, let me ask you a question. Now, are you ready for this? Because this is a tough one. Okay? Now, when I say no risk, okay, now I'm 60 years old. As far as I can recall, there has been Coca-Cola. Coca-Cola has been in business since the 1800s. I'm pretty confident, okay, that Coca-Cola is going to be here next year, the year after, the year after. Now, what happens if they drop a nuclear bomb on Atlanta, Georgia, and the Coca-Cola headquarters goes down the tubes? Well, they have manufacturing places all over the world. Coca-Cola is a dominating factor all over the world. Can you picture a world where Coca-Cola no longer exists? Now, I'm not talking about an alternative reality BS. I'm not talking about that crap. Can you honestly say that Coca-Cola is under the endangered species list? Okay? When I say no risk, I don't see Coca-Cola for the rest of my life going out of business. The risk is that you buy the stock and it drops more than you make in the premiums. That's it. Okay, that's not a risk. Okay, when you buy a stock, okay, when I'm telling you when I say buy a stock, make sure you want to hold it for the long term because you might have to. So if I buy Coca-Cola, let's bring it up. KO. Okay, let's say hypothetically I buy Coca-Cola at 65. Okay? Now, let's say I buy 1,000 shares. What is the dividend for Coca-Cola? Okay, so the dividend for Coca-Cola is 48 cents. Let's say I buy 1,000 shares. Okay? 1,000 shares, it's 64 bucks. That's the top. 1,000 shares. What am I getting in dividend? Well, I'm getting 1,000 of these bad boys, 485 bucks. Let's say, hypothetically, okay, this is all hypothetically, the stock drops to $52. I'm into it at 64, and it drops down to 52. I still have my 1,000 shares at 64. What am I getting in dividends? Well, I'm still getting the 485 because I have 1,000 shares. So once I buy it, regardless of what I buy it for, if I buy it for $1, if I buy it for $1,000, I am collecting the dividend because I am entitled to one dividend per share. 1,000 shares, I'm getting 485 bucks. Now, whether it's 64, whether it's 52, doesn't really matter. Okay? The stock can go down to 1, the stock can go to 1,000. As long as I own 1,000 shares, regardless of what I bought it at, I am entitled to that dividend. So if I'm buying a stock specifically to capture a dividend, great, here's a dividend. If the stock is here, I sell a covered call against it for 65, it never hits 65, I still collect the premium. If it drops down to here to 52, and I sell the 54 premiums, I'm still collecting the premium, I'm still collecting the dividend. Okay? So you're saying the dividend covers your risk. No, Parkus, what I'm saying is never buy something you're not willing to hold on to. Okay, this is long-term investing. Okay, if I buy Coca-Cola, okay, rule number 1, never buy something you don't want to hold because you might have to. Now, if I buy Coca-Cola at 65 and it starts dropping, I still own Coca-Cola. They consistently increase their dividends every single year. That's where I see there's no risk. The risk comes in is when you sell it for less than what you paid for it. So if I buy it at 64 or 65 and she drops and I sell it for less than what I paid for it, well, that's my own damn fault. I'm a day trader. Holding is hard for me. Well, then you're definitely in the wrong place, dude. This is not for day trading. This is specifically for people who want a safe, predictable, consistent 1% per week. Okay, now, I buy stocks, specifically those companies that have increased for 20 years or more. Why? Because worst case scenario, if the stock, it's not an if, it's when. Look, Okay, 63 down to 52. Stocks go down. That's all they do. They go up, they go down. They don't do any, holy cow, it's 11:30. They don't do anything else. Seriously, they don't do anything else. Look, it came down, went up, came down, went up, came down, went up, up, down, up, down, up, down, up, down. I can do that forever. How often does it pay a dividend? Well, Coca-Cola pays a dividend every 90 days. Okay, every 90 days. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, October, September. Fourth quarter, October, November, December. Every quarter, they pay a dividend. After they pay 4 dividends, they increase it. Every year, Coca-Cola has been increasing their dividends for more than 5 decades. That's 50 years. There's some companies, there's a company called GPC, Genuine Parts Corporation. They've increased their dividends for seven decades, 70 consecutive years increasing their dividends. I love GPC. I don't buy it, but I love it. I have Walmart, Caterpillar, and Health Peak. All right, Larry, I'm not quite sure what that means, but I'm sure there was a reason why you bought it. Now, I'm pretty sure the reason why you bought it wasn't the reason why I would buy it. I would buy Walmart specifically to get in, get that profit, get the hell out, see you again in 90 days. Caterpillar, exact same thing. Buy Caterpillar, get my 1%, thank you very much, see you in 90 days. The 90 days are coming whether you like it or not. Please check my question. Is there always a company that pays a dividend every week? Nope. Otherwise, you don't sell calls. No. Okay, see, let me go and show you this, Hakuna. All right. Oh, you know what? All right. All right, I don't want that one. Okay. You see all these little green dots? All right, Hakuna, Parkaris. No, I want to learn from you. I'm tired of small caps. Where do I go? I'm 38 and tired of risk. Well, Pakaris, what I could tell you, because it's past 11:30. I'm on every night between 9 and 11:30. Come back every night. Number one question you need to ask yourself and see if it makes sense. Does this make sense? That's it. Okay, there's only 300 companies that have consistently increased their dividends for more than 20 consecutive years. Dividend kings, dividend aristocrats, dividend champions, dividend contenders,